Good morning, Ken. Good to see you, my friend. Please just, if it's okay with you, let me know if you got the good visuals, voice is good, volume is good, just to make sure everything is set up before we get started. But so far, everything has been running smoothly this week. We had ran into some issues last week, but this week everything's been running really smooth. So if you could just confirm with me, brother, I would appreciate that. Brian, good morning. What's up, Ken? Hey, look at gold. Look at gold right there. Obviously, again, you know what we do in these streams. We're not gonna sit here and boast and talk about how we were literally talking about potential sells on gold. We're gonna go over this, explain it, go over what happened last night and what actually pushed this market lower. So we'll make sure to break that down. Okay, I appreciate it. Everything looks good. Everything is great. Awesome. Nice. Yeah, make sure to share this with your friends. Let them know we're about to get started. Today, of course, we're going to talk about trade ideas. We're going to go over the markets, make sure that we have everything broken down. I believe today, which is, 8:30, we had this manufacturing index. We'll see whether or not this is going to be a very optimistic or pessimistic report to add on to our bias, right? We'll be looking to see if we have a optimistic report. We know that there should be no reason for dollar to have somewhat of a reversal based off of the economic data, right? But so far, everything we've been talking about this week has been on point. You know, the inflation fears. We were aware of the fact that, you know, the war in the Middle East is still going on. They have negotiations going on. Actually, we'll talk a little bit about that today because that's part of the reason as to why gold had such a strong move down. But we had multiple edges, multiple confluences to understand at least why gold should be pressured against the US dollar. So again, we'll break that down in just a second. But let's actually go ahead and get started here. And so we're a few minutes away from that report being released. Again, we'll take a look at that to see if that's going to add on to the bearish bias for gold. But let's quickly review what we've been doing this week, guys. So if we go and follow really from, I would say from more importantly, like the day that we had CPI, which was on Tuesday, that's sort of when the bearish price action became a lot more clear in the sense that we had this sell-off from the highs. We had price action trading below key levels in significant areas. The recoveries were, I would say, small in comparison to like the move that we had from these highs here. Like we had a strong move down, a recovery, but the recovery really only came to a previous area of interest before continuing to push lower. So we had inflation reports showing that inflation was higher than expected in the US. We understood that this information meant for the Fed that they could most likely keep the rate cut narrative more on standby, right? There's no rush to do any sort of rate cuts, which basically translates to higher rates for longer, which that has been supporting yields, right? If we take a look at yields, I believe yields hit like I'm not entirely sure. I think it was like a 5-year high or something that I read. I actually have it right here. Let me see. Was it this one? Oh, 1-year highs, excuse me, not 5-year highs. You can see right here, gold prices plunge as the US dollar index clears 99 and treasury yields hit 1-year highs, right? I got confused there with that headline. But again, important for us to understand so that way when we look at the market, we're not entirely lost. We're not just looking at this and thinking, wow, what's going on? Why did gold drop so much? None of that. We've literally been breaking this down day by day, step by step, price point to the next price point without adding too much, let's say, ego into our analysis, just simply taking it level by level, understanding the zones that price is at, understanding where price could react. Like for example, when price was reaching these lows, were we here sitting down thinking, let's sell gold and because gold is going to melt? Or did we look at that as a potential area of interest, an area of reaction where in the past buyers have interacted at this area? So we're objectively looking at the markets, taking it level by level, following the overall narrative. And you can see just how clean the markets pushed, right? Like look at, for example, yesterday where we had the retail sales report came out. It came out more neutral, but in reality, instead of me looking at that report as neutral, like let's take a look at that. I saw it more as like, does this bring strong bearish price action to the dollar, right? Like, are we looking at a report that's super negative, right? A report that's signaling we may see some potential recessions in the near future. None of that. The report was relatively neutral. Initial jobless claims also relatively neutral. We're not seeing a large spike up in jobless claims. So we didn't really have a reason for dollar to, let's say, to sell off. So not necessarily that we had, like, let's say, a very strong fundamental edge based off of these two reports, but just by following what was going on in the previous days, which was, again, higher yields, rate cut narrative being pushed to the side, gold being pressured towards the downside, while yields and dollar climbed towards the upside, right? Like, we were talking about dollar again all this week, understanding when dollar reached this area of resistance, that's the area we want to make sure we break above to signal more buyers in the market. And that's exactly what we see here, just based off the price action. And overall, that dollar push has been very, very strong this entire week. Another thing that took place yesterday, which I wanted to talk about as well, is that we're getting more tensions around the war in the Middle East, right? The negotiations that the markets had been pricing in, and sort of like that, those optimistic negotiations that were supposed to take place, they were basically eliminated with Trump's comments yesterday, talking about if Iran doesn't clear, if they don't get the Iran nuclear dust, then basically they're going in, right? That's, again, adding to that geopolitical tension, meaning that conflict is nowhere to be done unless Iran does as the US wants. But as we've seen this entire war, they're not giving in so easily. So those tensions started to come in. Yields started to climb, dollars started to climb, and then gold, as you can see, had a massive drop, finally breaking below those 46.50s, where in the past we've reacted right here. For example, we got to this exact price point, reacted just right there, and then pushed towards the upside. This strong drop from these highs right here also pushed to that exact zone, like looking at it from just hindsight, and we reacted at the 46.50. So yesterday when we were breaking down the markets, we were stuck within this range, right? Price was stuck within this range, and we understood that as long as we're not breaking above those 47.05s, then it is more probable that gold can continue to push towards the downside there. So again, you can see very clearly how price did not get above that area. We actually ended up rejecting that zone, started to trade below our next area of interest, which was the 46.90s. As price reached that area, we understood, okay, we need to trade below that zone for us to have stronger technical reasoning to understand why gold may push lower. Where's the next area that gold might push to? Let's look out for the 46.70s. If we can break below the 46.70s, we'll take it on to the next zone, which is the 46.50s. So you can see, again, clear reactions off of those 70s right there. Basically a break and retest type of scenario that played out here. Price goes up back into this area of interest, the 46.90s, fails to trade above and close back above that area. So we're not stuck within that range. And then you guys can see what took place right there, right? So let's go ahead and quickly take a look at the economic calendar here. That way we make sure that we're all caught up on that. Let's see here. Let me see the reactions. Okay, so 19.6, that's a strong report. So that report also is feeding onto more dollar bulls. We can see very clearly, again, what we were mainly paying attention to was to see if we were going to get a pessimistic report that could go against these dollar bulls that we're seeing right now. But with such a strong report that we just got right there, again, no reasoning from a fundamental perspective for us to look at dollar and think dollar is going to sell off, right? It is Friday. We have had significant moves towards the upside. Dollar is reaching an area of interest. So we'll go ahead and mark off these highs on the dollar, and we'll pay close attention in case we get to this area as we're at right now, the 99.2s. And if we have sort of any strong reversals, we'll go ahead and make sure to look at gold and understand also where price is at. So now that we're caught up, let me just make sure everybody here in the chat, did that make sense? We did just a quick review. We'll go ahead and do a deeper review later, but I want to get ahead and actually, mark off the zones, look at the potential opportunities that we have for today. Luke, Leonardo, what's up? Good to meet you guys. Good to see you guys here on the stream. But again, if you guys review the sessions that we did throughout this entire week, we've literally been breaking this down step by step. So A quick pat on the back for all of us there that's been, you know, maintaining their composure, not forcing any trades, none of that. You know, just again following that narrative, understanding the technicals, understanding the fundamentals driving, you know, these technicals right here, like what we're looking at gold. So, all right, makes sense, Elijah? Okay, appreciate it. So, okay, now we understand clearly where we're at in the sense of like a fundamental perspective, right? We understand why gold is more bearish. We understand how that correlates to dollar and why dollar is more strong. And so let's look at gold. And what I'm noticing here right away is that we've reached an area of interest once more. We've reached the 4530s. And as you can see, the 4530s in the past right here is an area of support on that daily time frame. So I'm going to mark off the lows of that daily wick that we just created right here. And you can see towards the left the reactions that we had at this area. Not exactly precise, but the overall range is right around here. Those 4500s really is kind of like that area, right? The 4500s, just to kind of have like an overview and a price range of where price is at. So we reached like the 4530s, yeah, 4530s. And so we understand where we're at. We understand we're at an area where in the past, look at those reactions. Look at how, for example, if I go really quickly here and I show you guys here on the whiteboard, you can see in the past how price above this area, like look, we can go all the way to the left and start off from here, where price action was trading very bullish, and we got to around those 4500s and had a sharp drop before finally making our way towards the upside here. Look at how we pushed above and literally retested that area before continuing to have a strong push towards the upside there. Let's go ahead and continue here and see other reactions at this zone. Here we had minor reactions and price action was very strong, pushing lower. So we pushed strong below that area, but the recovery, look at where the recovery got to. It got to that exact price point. So clearly there's interaction at this area of interest, right? We have interaction right here. We have once more interaction at this area. When we're talking about the interactions that are, okay, sorry, I thought I was looking at the wrong angle. When we're looking at those interactions, let's ask ourselves who was in control above this area. Above that zone, notice how here we had, for example, failure to really trade and close above. Like we slightly pushed above that area, but we did not really close above. But once we do get above that area and maintain above that zone, which again, it's around the 4525s, more or less, that area that we have marked off here. Look at how strong those buyers came in. You have strong buyers that came in here, strong buyers that came in there. You saw strong buyers also came in right there. So again, above those 4520s, we have to be on the lookout in case we're going to get any sort of recoveries before any further continuations can take place. But that would be below those 4520s. But again, keep in mind, we've already had a significant drop. Like gold is already down 2% on the day, right? So we would have to expect a very strong catalyst, very strong price action to come into the markets for us to really push those lows. That means we need to see dollar climbing. We're right now at 0.39% up on the dollar for the day. So if we continue to see dollar start to go up 0.45, 0.50, and we see that that strength on the dollar is holding, then we could have a stronger edge as to why gold can push lower. Again, because we're seeing a lot of dollar strength. So we'll pay close attention to just how strong the dollar is. But again, keep in mind, remember what we're looking at. Gold is at an area of support after we've already had a significant drop. At the same time that if we go and look at the dollar is at an area of resistance. Right now we're trading above that area of resistance, which is good. This is good in the sense that we have clear structure, clear candles and buyers in the market right now, just based off of what we're looking on the technicals here. You can see once, like now we've just reached 0.41% on the dollar. We're climbing towards the upside, which again, that's good for us to understand that bias and why that could help on gold. So we have that area marked off. Let's go ahead and go back here and just make sure that we have our areas of interest marked off. We have another area of interest just around here, 4585s, which in the past it was this area of support before breaking lower, area of resistance before finally getting above. Here you have a little bit of price action messing around that zone, but then look here, for example, another strong reaction. reaction off those lows, the push towards the upside goes to the 45.80s, and it reacts before overall it did continue above. So again, now we have another clear idea right there. What am I seeing, for example, just to kind of have you guys understand my my thought process here is, again, once more, look at the clues that price has given you in the past, which is we've reacted and bounced and rejected off those lows. Here's a nice little double bottom pattern that we're seeing here from a technical perspective. But what I'm looking at and paying attention to is the fact that if we get above that area of interest, which is literally where price created that wick for us right there, above that we could see strong signs of recovery. So I point this out, that way we can prepare ourselves in case we do see strong recoveries on gold, in case we see, like, for example, maybe a little bit of a reversal on the dollar there, just by, you know, profit taking on gold, profit taking on dollar to end the week. We have to prepare ourselves, right? But that means also that if price is to reach that zone and we continue to reject, what has happened in the past if we reject that area? We've seen sellers step in, right? This was a minor sell-off right here, but below the zone, again, below the zone, below the 45.80s. That's our clue right there. That means further selling price action can take place. And then, of course, again, like I said, just be on the lookout in case you do get strong volatility. I don't want to say that the market is not going to melt or trade below this zone, because, you know, I'm no market maker, but all we can do is really prepare ourselves. But I believe that there is a strong chance that we could see a recovery, at least back up into the 45.80s, where we'll take a look at the interaction with traders there to see if we're going to get another minor move towards the downside, if we can go ahead and retest those highs. So as we go down into the intraday timeframes, or excuse me, into the lower timeframes, we're gonna understand that a little bit more. So let me go back here. I'm gonna take a look at this on the 1 hour, just to make sure we have our zones marked off good. So yeah, I would say these zones are good because we know that these are daily zones and these are 4-hour zones. Looking at this on the 1 hour, we can see clearly 45.80s is exactly kind of like that high price point that price got to. Tried to really trade above that, but failed to do so. But we also do notice that just like around those 45.70s, we also have here, sorry about that, just below the 45.70s, we also have like a 1 hour area of resistance. So we can even be on the lookout in case price doesn't even get above those 70s. Again, we're still a lot more bearish, right? Like if we look at that market, that's clearly bearish, right? Like we see the clear price action pushing price lower. We see the clear interaction that we had once we got below this area, which was a nice break, a retest, and then a continuation towards the downside. That's exactly what happened here. The break, the retest, the continuation to the downside, right? Right now, what we've gotten in these past couple of hours is price reacting and rejecting off of that zone, and we've retested this minor area of resistance that we have on the 4 hour. So right now, for the moment, there really is no reason for us to be looking out for buys unless we get back into the zone and we just continue to reject and we have clear interaction that buyers are stepping in at this area, and we could see at least a short-term recovery into these areas before pushing back lower there, right? That's what I would really prepare for. But again, we've had a great week, guys. We've had a great week. We've been calling out, or we've been looking out, I want to say calling out, but we've been looking out for those sells pretty much the entire week. What was a bit unfortunate about this week, and I don't even want to say unfortunate, but the reality of what we were doing this week is that for the most part, a lot of times during our New York session, like it literally happened on CPI day. On CPI day, price was trading within this ranging area before pushing lower later in the day. The next day, we got back during New York session, and once more, price was at this exact area. It was once more in this range. So this entire week, we were literally just looking out for bearish price action, but we knew we needed to trade below those 46.90s and get below or stay below those 47.05s, which again, you can see clearly how we did that. But then on, what was it, on Thursday? Believe it or not, Thursday comes in, and we're literally back at that exact zone, right? That's the importance for me, in my opinion, why you want to be aware of the previous day's price action, the previous day's fundamental narrative. What has been going on these past couple of days, and why is price influenced by those events that take place? So again, this week, We had great examples, which was higher inflation, stronger dollar, the idea that the Fed could be more cautious when it comes to rate cuts. So that has been pushing yields higher as investors price in higher rates for longer. And then finally, later in the day, after of course we ended our session, this was all the way in the afternoon already, price action starts to finally break lower. Then you have Asia session come in and we just absolutely melt on gold. And you guys can see that clear image right there, right? So now what I want to do is we understand that price action is bearish, right? Very clear. Let me see. Appreciate the feedback. We'll try and fix that. I'll look into that. It's a little bit dark when you switch to the big board. All good. I appreciate the feedback. We'll make sure to try and fix that a little bit because I do notice that the screen is just a little bit dark when we do that, but no worries. We'll go ahead and fix that. I appreciate you letting me know so that way I can look into that. But now let's zoom into price action because we know that, again, we know we're bearish. We know that price is pushing lower, but we're at this area of interest. What I want to do is I want to look at this on the lower time frames. And I can see here how, like, for example, on this 15-minute time frame, we're creating a little bit of an area of support at this area right here. These 45 is basically 5-minute as well. It's like price is trying to push lower, but it is having clear interactions off of this zone. So what I want to prepare ourselves for is, zoom out a little bit more. This is what I want to be careful with. I'm looking at this on the 1 minute, guys. I'm going to show you guys why I look at the 1 minute to really understand what it is that we're paying attention to right now. So let's go quickly back to this whiteboard here. And now here's what I'm noticing. Let me write this out. So like I just explained, I just ranted for like 10 minutes talking about why we've been seeing such bearish price action. We get it. Let's move past that and let's look at price action right now. The interaction we're seeing right now off of these lows is very clear rejections off that area. And for example, this sort of structure that we were following here, which was more on the bearish side, right? We can clearly see that. We have, for example, this structure point right here that was created for us on the lower time frames, which was this last lower high point before creating these new lows for us right here. You can see price has now broken that area and we've pushed above that, meaning that on the lower time frames, we're starting to show signs of reversal. We're not seeing that on the higher time frames, but on these lower time frames, this is what I'm noticing. A break of the overall structure that has pushed price towards the downside. Again, we're looking at this on the lower time frames. Look at how price gets above that area and basically retests that same zone of interest before pushing into those 45.70s, which is that area of interest that we just pointed out on the 1 hour. Look at how, again, following through on this price action, the rejection comes here. And we don't have, like, let's say, a full sweep easy back to the lows to really respect that overall structure that we were on, right? We're actually seeing somewhat of buyers stepping in literally at those same areas of interest, right? Around the price range that we're at right now. Meaning that for me, unless we are to see very clear pushes below those 45.32s, I'm thinking that gold today can easily have somewhat of a correction, at least back up into these 45.70s, possibly even higher to these 45.84s. Now, I'm not saying let's completely switch our bias and just turn bullish because we should expect reversals off of lows. That's not the case at all. What I'm simply stating is the fact that the interaction we're getting off these lows is clearly a bit more bullish because of the fact that price action, rather than just continuing lower here or respecting that overall structure, almost dropped that there. What we're actually seeing is, again, the strong rejections and now sort of signs of reversal. So again, if we want to have a clear bearish bias for the first part right now, we're in the middle of the range. Why force trades in there? In my opinion, that's not necessary. I would much rather wait for price action to get to the 70s and look out for rejections for me to have maybe a higher risk to reward. So like low risk, but then large upside, right? That's what I want to see. If price action is going to do a deeper pullback and get to this area and also give me rejections off that zone, again, I have small risk. large upside that I can look out for, instead of me looking to take a risk right here. And I have, where do you even put your stop loss, right? Like, even just looking at that in hindsight, where do you put your stop loss? Like a valid stop loss, right? Obviously we can easily see the market just melt, sure, but where are you going to put your stop loss, right? If you put it here, is your analysis really invalidated? No, price action is still within that area. You're still bearish, but maybe you just got wrong timing before price melted off. You get what I'm saying? So that's what I really want to be on the lookout for. Again, I don't want to be blinded by the fact that gold is just melting, because a lot of times you'll see that price will just have such strong moves, like for example in this case towards the downside, and then people just start, or traders start to just chase the move. They start to chase the sells. They start to just only get married to that one bias without really thinking that they've already missed out on that large move, right? And if you really think about it, we've already positioned ourselves in the previous days to look out for those sells, meaning that right now, if you're looking still for sells, unless again you're really trading below those lows, in my opinion, you're chasing sells. You're chasing the market, and a lot of times we already know that that's not the right idea. We don't want to sit here, try and chase the market, try and force moves. You think that just because you woke up this morning and you were bearish for the week on gold, and now you have FOMO. Now you're looking at the market and you're thinking, damn, I missed the entire move. Now instead of you waiting patiently for maybe a better setup, you're just gonna sit there and try and chase the market, and before you know it, you did super good this entire week just for you to give it back on Friday after price starts to reverse on you. You get what I'm saying? So that's really what we want to be on the lookout. Let's be on the lookout for any signs of reversals back into those 45.70s. It'll be different if we just completely stay below that area here on those lower time frames and then start to trade back here. That'll be the different there. But right now, I'm thinking price is easily showing signs of reversals right there on those lower time frames. So we'll analyze that. We have the 1 hour candle closing soon. Let's go back to this angle here. Good morning, good morning. For those of you that were in the lives, I want to know a little bit about your trading. Did you guys take trades? Were you following the overall analysis? If you're new to the streams, is this something that you're just learning? Were you not aware of the fact that fundamentals has such a strong impact on the markets? Because I mean, if this is not strong proof that fundamentals really does run the narrative on the markets, then I don't know what to tell you, in my opinion. Because we've literally been talking about all the bearish fundamentals and all the bearish reasonings as to why price can continue to push lower. Again, without marrying bias, without literally just only saying, you know what, that's what I'm gonna sell and I'm just gonna hold for the week. Nothing like that. We've literally broke it down to the point where it's like, okay, we're bearish and we understand that gold is more influenced on the seller side, but we still need price action to help us time our trades correctly. We still need to understand where price is sitting, which is what we're doing today. We're understanding that price is at an area of interest where in the past we've seen large moves back up. Like, let's study price action and let's look at this. Like, we literally have the answer right here in front of us, right? And this is going to be an example that I want to show you guys, because again, I'm not entirely sure what a level of experience you guys have and how you guys analyze the markets, but that's what I'm here for. I'm here to give you guys valuable insights and help you point out those things that you might not be able to know yourself, right? So for example, look at how today we're at these lows, and if we study price action and if we look towards the past, do we not see a similar pattern? I want to know what you guys think in the chat there. For me, it's very clear what we're seeing right now. Look at how we're basically repeating ourselves here. We have markets ranging around this area. Let's follow this step by step. Markets ranging at this area right here before having a push towards the downside. Look at price action right here. Price action trading and ranging around that area as well before getting below that area of interest. Notice how, again, we went from ranging to finally breaking the lows of the range, having a very strong move. Notice how once we got below that area, it was basically gone, basically didn't look back. It did the same thing here. as it did right here, right? Where did price go to? Price went to the overall low, what I'm trying to point out. Price went to this price point, those 4500s, which is what I was talking about, 4530s to be more precise. And look at the reaction that we had. So what I'm trying to explain to you guys is when we study the market and when we look at the past, this is really important for us to understand, because that way we have an objective point of view. That way when we look at the market today, instead of thinking, well, price action melted, that means that if I get in a sell, I'm gonna win because price has to melt. Look at the technicals, it has to melt. That's the wrong idea. Again, study price action. Look at what price has done in the past. After such a strong and such a significant move to the downside, notice how we literally get to this zone of interest and we pause and we have a strong reaction off that zone. Look at the strong reversal that we got after we got to this area before once again retesting that zone and still rejecting that area and still recovering back towards the upside. Meaning that today we could very much see a similar thing. We have a strong push down. We have price action literally stopping at the same exact price point. We have rejections at those lows and failure to push any lower. That's why today, rather than me sit here and think, you know what, price action already melted, we're gonna reverse. I'm not telling you that. I am telling you though that we have had strong reactions and strong buyer reaction off of that zone, and we've at least gone to retest these areas of interest like we see right here clearly. But we really get to the 4580s, right? Like more importantly, like the 4580s is the zone that price has gotten to after reacting off of those areas. Meaning that if this continues to be the case, if we continue to see rejections off of that zone and sellers failing to step through, we see that dollar is still around the 0.30% and not really pushing any higher, then that means that gold, we can easily see at least somewhat of a correction back into those 4580s before potentially at the 4580s, we do have once more another sell-off off of that area. You see that right there. Even look at this wick right here. Like, I'm not sure if you guys can see that, but if you follow through on your chart and you look at after this zone right here, when we retested this again, this is a wick right here that literally got to that exact price point, and it went from one point to the other. It went from, just like this, it went from one low to a high, to then back to the lows, to back to the highs, and then finally we pushed above. So that's what we're kind of getting, or that's the idea for today. We got the reactions at the lows. If we continue to reject this zone, then we can easily go back into those 4580s, where if we don't break above the 4580s, we could push back towards the downside there. Above the 4580s, again, based off of price action and the study of price here, strong moves up. So be careful, anything above 4580s. Does that make sense, guys? Let me know in the chat if that makes sense. Again, I just want to make sure to point that out and prepare ourselves so that way we're not completely blinded by the idea that gold already had such a strong and significant drop there. Let me know if that makes sense, guys. And if, of course, if you have any questions. We got about another minute until this 1 hour candle closes. We can see that right now, as we're looking at this, we are getting a bit of a, it's looking like a weak candle. It's not showing us strong sellers. It's not showing us strong buyers. It's honestly just rejecting on both ways, sort of being indecisive at this area here of interest that we're looking at. You know what I'm gonna do? I'm gonna go ahead and move this zone here. This is gonna be our area of support, just based off the candle bodies here, like the 45, 43s, more or less. And what I will do also, to have that visual representation there, I'm gonna mark off those lows, the wick lows right here. So we know that if we continue to trade below those 45, 44s, we're most likely gonna go back and retest those 45, 30s, and we'll be on the lookout for further pushes below that area. I think that's a better way of marking that area off. Yeah, we also have like, for example, like look at how it like precisely on the 4-hour, the candle body stays above that zone. 1 hour, also candle bodies staying above that zone. We have the new 1-hour candle opening up now. So let's be careful with that. Notice how we just stopped at that exact price point of interest right there at that zone of support. So be on the lookout in case you continue to see rejections here, and in case price decides to continue to push towards the upside off of these rejections right here. Anything below here, we already know that the possibility is at least down into the 45.30s. And let's look at this more closely. 30-minute time frame. We also have candle bodies staying above that area of interest. 15-minute time frame. Another candle, or excuse me, more candles continuing to stay above that area of interest. We have wicks that did reach here. We understand that. But again, this to me still signals that even if price wicks into this area, unless we get a clear candle close below, I wouldn't think that price is going to push any lower. Just based off what we've seen in the past, which is price did push low, but the candle body still stayed above. So we want to make sure that we not just push below, we want to make sure we get the push below and the candle closures below to give us those stronger confirmations. 5-minute as well, giving us reactions off of that area. Right now we're getting a push towards the lows. Be on the lookout in case price goes into those 45.30s, where again below that area we could possibly see even further pushes. But this is what I want to avoid as well. I don't want to get caught chasing a move. If you do look out for sells, make sure that again, don't get greedy in the sense that you've seen price in the past, it pushes, but then it also gives strong reversals against that. Meaning if you're looking into sells and you see prices pushing in your favor and you're reaching an area of interest like those 45.32s, think about managing your risk. Think about maybe putting stop losses to break even, trailing your stop losses, maybe securing some of that profit that you've made if you're still following that bearish bias, right? Because again, you don't want to get caught with price action getting to the lows and you think that it's just going to melt and going to continue. You don't follow your plan, you get greedy, and then price reverses and you end up the day with a loss, with no money, knowing that you could have been disciplined and followed through on your plan. So let's be on the lookout here. We'll pay close attention to this. And again, what we want to see, like zooming in a little bit more to price action, what we want to see is clear candle closures below, which is what we're getting right now. So now really what we need in our favor is just more momentum to really push price lower. So guys, let me ask you guys once again, what trades did you take? What trades do you guys want to share with me? Because I know someone yesterday said that they wanted to do a review for today. I'll be happy to again look into those trades, review them, look at the price points. I know some of you took really nice trades yesterday, so we can analyze that. Did you guys take any trades today? Are you even looking to trade today? Tell me a little bit more about what you guys are doing as we're watching price. We don't want to just sit here in silence. Let me get some water here. We have another minute until the 5-minute candle closes. Ideally, for sellers, we need to get that candle closed below. If you continue to reject that zone, then you've already seen what's happened in the past. So again, let's pay attention to that. Let's see how these lower time frames are going to start to close. We'll look at the 1, we'll look at the 5, we'll look at the 15, and we'll follow through obviously as, like, for example, once we get into NYSE volume, or excuse me, NYSE open, then that's when we can look at the 30-minute time frame, see how it closed, and then assess that there. But we'll keep it on the lower time frames here, and again, just follow along. I have it here on the 5-minute because that's the next candle is going to be closing. Let's see if we can make it, maybe get a strong little push here. Because right now this is looking still like a bit of a rejection candle. It gives mixed signals right now. because it's like, okay, the candle is closing bearish, but it's also a bearish candle with a large rejection wick. So that's kind of like what we're paying attention there. All right, about another 10 minutes until that 15-minute candle closes. More importantly, I'll be looking out to see how this initial 15-minute candle closes now that the new hourly candle has opened. And we know that this is also a 4-hour candle close. So it has in terms of the trade you took yesterday, you took rejection buys off of lows, right? I believe it was this that you took. Was it, what time was it at? It was this. That was on the one. Let me look at that on the one. That's the trade you took, right? Do I trade myself? Yeah. For me personally, to be completely transparent with you, I'm not looking to risk more than like $250 off of a trade, really. That's kind of like how I base my risk. So I'm not really looking to risk more than $250 to gain an easy, $500, $750, depending on the risk to reward that I have. The account size, I'll keep that to myself. But yeah, in terms of risk, I really risk around $250, sometimes even $300, depending on the market. But that's around the threshold that I stay within to kind of keep it comfortable for myself. Brian, your trade was this one right here, right? It's risky. To give you my thoughts on this trade, it's risky in the sense that you had a lot of things going against you. But what's good about this trade is that you had very clean risk to reward, and you understood very well what you were looking at. You understood that the 4670s, right? You were on the futures chart. But it's still basically the same thing. But in my opinion, it's good in the sense that you had very clean risk to reward. You had an area of interest where price was reaching, and you did have a slight rejection. This is a 1-minute rejection. So when you're looking at 1-minute rejections, remember you don't have the strongest of confluences. That's just the 1 minute. Lower time frames we know does not hold the weight that a 1-hour candle close has or a 30-minute candle has, right? So that's where I would say be careful with these type of trades, because although again it played out, you at that moment didn't know if price action was just going to continue pushing lower. And if it pushed lower, when you look at that new journal, that from hindsight perspective, you're like, well, why did I even look for buys when I saw that price was pushing so strong to the downside, right? That's where I would say you have to be careful, right? When you're looking at those reversal moves, again, what's important about this is that in the past you had the same sharp reversal, which was 1-minute candles reached this area, rejected, and then just pushed. So you had the market repetition in your favor. But again, think about the things that were going against you. Dollar strength. We understood that gold was more bearish. We understood that at the moment we still had economic data supporting our bearish bias on gold. So you were more so anticipating a reversal, or not a reversal necessarily, but you were anticipating for price to at least react here and have a short-term move towards the upside. That's what I'm assuming your thesis was when you were looking at this trade here. So it's not right or wrong, but I would say in terms of like how I personally look at the market, going against the market is not my cup of tea. It's not my preferred scenario. You guys, for those of you that are familiar with how I trade, you know how I look to take my trades. I'm looking to confirm my fundamentals. I align my technicals. Once I have strong risk to reward in my favor, at that point, I don't even think about my trade. I know I have fundamentals in my favor, technicals in my favor, risk to reward is in my favor. I understand the risk that I'm taking. At that point, whatever happens, happens. But when I journal my trade, I know I have all of those check marks in my favor. I know that I can look to repeat that same process, right? So ask yourself that same question. Can you repeat this process on a consistent, maybe I don't want to say daily basis, but consistently? Do you look for trades where price goes in one way and you look for strong areas of reaction for you to look for a strong risk to reward trade to give you at least a short-term move against that overall trend, right? If you analyze the market in that way and that's what you do, stick to that. Continue to do that because you know what you're looking at. But in terms of overall market movement, again, I think you did have some things against you, so be careful with that. Because it's a shame to have so many things against you and yet you still take a trade, and then if you lost, you're like, that's a clear L right there. Like that was clearly the market going against me, right? That's what I want you to avoid, because we want those repeatable actions. And repeatable actions with the way that I trade is, we've seen plenty of time fundamentals have a strong edge. We've seen plenty of time that when the fundamentals are strong, the technicals will follow. We've seen that time and time and time after, like we've seen that so many times. So we know very clearly, okay, if I have fundamentals in my favor, technicals in my favor, good risk to reward in my favor as well, and I have these areas of interest marked off, I know that can be repeated and I can do that consistently. Therefore, I can just only do that, which is kind of like where I've reached in my trading career, right? Where I'm only looking to take trades that follow the fundamentals, the technicals, and I understand the risk that I take. Does that make sense? But all right, let's zoom in here now. Zooming into price action right now is still trading below our area of interest. This is what we want to continue seeing, right? And what's also good about this in terms of the continued sells is the fact that price is starting to, for example, remember how I pointed out the fact that price was now showing signs of reversal on the lower time frames? Notice how we're continuing to, let's say we have this area marked off right here. We're looking at an overall range, right? Excuse the crooked line there, but we're looking at the overall range of where price was showing us like reactions, right? What's important here is that, look, for example, how price, we got below this area of interest here and we've retested this zone. So what is good in terms of for the sellers, we need to see price for one, maintain below our area of interest here that we've now made. And we have to now just continue to break those lows, and we could see at least another steady move lower. Until we reach that area, then we don't need to be worried about price reactions there. We're below our area of interest. We know that we're in the clear. At this point, we just need volume in our favor to push price lower, right? That's really what we're looking at. But if you see that price is, let's say, trading below your zone, but then still trading back above, what is that telling you? I want to know that in the chat, and I'll ask the question again. If you see that price action is attempting to push price lower, yet you continue to see candles closing above the area of interest, as a trader, what does that tell you? I want to know what you guys think about that. And if I have to ask that question again, I will. But I just want to pick your guys' brain and help you guys understand as well. But yeah, Brian, of course. Like I've explained time and time again with the markets, there is no right or wrong. There is no right or wrong. No matter how strong fundamentals are, no matter how strong technicals might be, everybody has their own different perspective. What really matters in the market is, are you following an edge? Are you following a strict plan that you know has worked in the past? That's really what matters. So rather than you looking at that market and thinking, damn, I was wrong today because I took a loss. That's not the correct mentality, because you can easily follow your plan. You can easily have technicals, fundamentals, risk to reward. You can have 10, 15, 20 confluences in your favor, and still the market will go against you. Why? You have no control over that. Why sit there and question it? Don't think, oh man, I was wrong today. Then you get maybe you get very upset. You start to revenge trade because you think, if I have 10 confluences in my favor, why did I just lose? But it's because you have that mentality that you think you need to be right or wrong in the market, versus having the mentality that you have an edge, you have a plan. Are you following through on that plan? Win or lose, in my opinion, this is my opinion. I want to know if you guys agree with this or disagree with me. In my opinion, Win or lose, it honestly doesn't matter. What matters is, did you follow a plan? And this is why I believe that. Because if you win or lose, say you took a loss, but you still follow through on all of your plan, guess what? Your plan, as they should have, says, look, don't look to trade more than 2 times. Because after you take 2 losses, you might have the wrong analysis for the day. Maybe your mental is just off for the day and you shouldn't be taking trades. You get me? So you know how to protect yourself when you might be wrong. So you know what? I followed my plan. And I know that today I lost, but guess what? I still followed my plan. I still get to go and journal the fact that I followed through on my plan. Now I just have to study that and see what I actually did wrong. Was I rushing into a position? Was I not patient? Did I rush into a position and then economic data came out and it took me out? Analyze those things, because if you follow a plan and you follow through on what you have written out, what you can do is look at that at the end of the month and understand, okay, this worked, this didn't. What can I change about that? Should I change something about my trading plan? Okay, for example, all of my losses came before economic data was released. So if you look at your losses because you were following your plan, because if you don't follow a plan, then you don't have anything to really journal or really go over. Meaning that, okay, if I look at my plan and I see that all of my losses came before the economic data was released, what am I gonna do the following month before economic data gets released? Most likely I'll sit out and wait for the economic data. But you can only see that if you journaled and if you follow through on your plan. If you're not following through on your plan, you're just looking at your plan like, damn, emotional trading, over leveraging, not following my plan, taking random setups. You get me? So when you go in journal that, you're like, damn, I just have to fix myself. Like, there's nothing for me to do other than fix myself. And those are the most unnecessary losses in the market. You're just over trading, doing everything but following your plan. Right? So that's why I believe, again, rather than thinking, oh, I'm right, I'm wrong. No. Did I follow through on my edge? Did I follow through on my plan? Yes. Follow through on that, because today, even though it might not work, tomorrow it will. The following day it will. But you need to stick to a system that you know has worked for you in the past. A system that you've back tested, and a system that you have tested in live market conditions, right? But all right, my bad. Going back to the question that I asked you guys have it correct. Elijah, buyers are holding price at that support. And Love, indecision, I would agree as well. Indecision in the sense that right now, if we look at that, that's actually a really good answer, because that's literally what we're seeing. You're seeing price break lows, break back above, break lows, break back above. So that's clear indecision that you're seeing right here in the market. Same as what Elijah just said, which is buyers are holding support. That is clearly what we're seeing. We're seeing the indecision, and we're seeing buyers still holding that area. We're now trading now above that little area of interest, which I was just talking about, which again signals to us, be careful. Be careful in case you're looking for sells, because right now you don't have strong sellers at that area. You actually have rejection of the lows and price now trading back above this area of interest, where in the past we've seen a push higher. Be careful in case you see retest of this area. Take it level by level. If you see a retest of this zone and you see price pushing further above that, what's the next area of interest? Right here. Look at that push. So good eye right there, you guys looking at that. A break above 45.50s, reversal up to 45.60s or the 70s. Let me see, 45.50s. Okay, that's okay. You were pointing out what was taking place. Yeah, I would agree. Yeah, above this area now, we're starting to break back above this zone once more. We could easily probably go back into those 60s right here. But definitely, I would agree with the indecision, that answer right there. I really like that answer. My losses come at New York opening. Is the New York opening 8 a.m. Eastern, or are you talking about NYSE, the 9:30? So my losses come at New York opening. Now I just sit back and wait till 10 a.m. FOMO and revenge trading I'm working on. Okay. This is really important right here for you to understand that awareness it's key. That awareness is key in the market, because a lot of us, we want to ignore the idea that we're doing things wrong. But the fact that you're aware of the fact that you know you get FOMO and you know you start to do revenge trading, it's really good that you have the awareness to say, you know what, I need to maybe sit out and learn to be more patient and look at the, okay, 9:30 a.m. East, so New York Stock Exchange open. So there you go. Analyze that and work on that. Let me ask you, do you journal all your trades? Do you have a proper journal that you follow through on? And a proper trading system that you also follow through on? Like, does your system tell you to not trade before 9:30 a.m.? Or do you have it just maybe free for you to maybe decide? Because another thing that you want to understand is that when it comes to that trading plan, the goal of the trading plan is for you to not have to think that much during the time of action. Because we know as humans, we make mistakes. We're not perfect. So the goal of the trading plan is for us to have an understanding of like, look, I just need check mark after check mark after check mark. If all of those things are checked off, I should just take a trade once I get my entry confirmation without even thinking about it. Because if not, you invite those demons into your head where it's like, wait, you know what? Should I take a trade right now? And it's like, you know, you have your edge. Everything is going in your way. But the moment that it comes to take action and take that trade, now you're questioning yourself because you don't have maybe a clear written out plan. Versus you want to, again, check mark. Okay, price is bouncing off of the area of support. That's the last entry criteria I need. When it gets there, you don't think about anything else. You're in the trade, you accept your risk. You already know how much you're risking. You know where your stop loss should be. You know where your take profits are. You don't get into a trade and then think, oh wait, I'm in a trade, where do I put my stop loss? No. It's all of that is thought through before, you know, that's already written out. That is already not even in your mind. We got 10 minutes to 9:30 a.m. Eastern time where we get a new push in the market. Yeah, we could expect some more volume. Usually we've seen more volume come in around 9:30 a.m. Eastern time, of course. Always have to wait for this, otherwise we'll be caught in the whipsaw for the NYSE open. Yeah, that is definitely a possibility. It doesn't always happen, but in terms of probabilities, when we're looking at the market, we know damn well NYSE open, that volatility and that volume comes in at times, and it just, especially if you're looking at trades at markets like SPX, you're looking at ES, that's when NYSE really matters a lot more. But right now we're focusing specifically on gold. And also guys, we are going to be doing analysis on other pairs. Okay, we're going to be doing analysis on other, mainly USD pairs. We'll also look into, like, for example, US 30. So that's a pair that I've been wanting to look into more. So we'll take a look at US 30. We'll take a look at those indices there and make sure that we're analyzing the markets, and it all correlates. It's all very much, you know, interconnected. So our analysis really doesn't change too much. We use the same fundamentals, same technical concepts, just obviously different charts, different areas of reaction, different behaviors. Some charts might be more impacted by other things, you know, so we will find our ways to dodge and weave around those punches there that the market likes to throw, you know. Those demons. Yeah, I know. I mentioned that because I very much understand what you're talking about. Those demons, they come. But the plan saves you, I promise you. The plan is what really, like, when it comes to giving trading advice, let's call it, have a trading plan. Build yourself a system, back test it, something that you've researched, something that you have seen with your own eyes, and follow through on that. That's what really matters, because at the end of the month, when you're analyzing your performance, you don't have to look at that and think, man, you know what, I let some random guy on the chat tell me to buy at this area and I took unnecessary losses. That's not what we want to write out. We want to write out the fact that we followed through on everything that we said we would. We followed our edge. We let the market do what it does, and then that's it. You have no, remember, you have no control over the market. The market doesn't owe you anything. The market doesn't even care about us. It does not matter. So why add so much emotions into it, you know? The market just exists. It just exists. We're lucky to even have such a tool where we can go in and actually make money off of this, you know, if you're doing it correctly, of course, because we know how the markets can invite some demons, you know, some gambling demons in. It's tricky, but it's with the trading plan, with structure. That's where you have that that's where you thrive as a trader. But all right, good call. What's your name, brother? Amon Carter. Good call right here. Look, price basically has reached, okay, we're almost, I thought we reached the 60s, but we're basically at this area right here of the resistance on the lower time frames. So if we look at where we're at right now, it's basically this zone right here, this area, which is also a little bit of an area right here. So careful with the reactions, right? But we know above here, stronger probabilities that the reversal is likely to continue. But so far, in the sense of like, we did get minor pushes below, but notice how we pointed out and we explained what we needed to see earlier on. And we knew that in the past, we've seen liquidity grabs off that area. So unless we see like strong candle closures, like the 15, the 30 closing below here, it's not giving us a strong sell signal. And we're at a strong area of support. And like you guys pointed out earlier, we have indecision and we have buyers still holding that support. And funny enough, what did we get? A push right back into an area of interest. So now let's take it level by level, as we always do. Careful with the reactions at these highs. If we cannot break above these highs, then at that point, we're stuck in basically between a range, right? On the lower time frames, of course. But anything above that, at that point, you already know that is likely to mirror this move right here. At least push up into like the 65s, the 70s, possibly even higher right there. But we're getting some good reactions off of those highs right there. So just pay attention to that. Now, the question is, was anybody looking to take trades off of those ideas? Were you looking for sells off the lows? Were you waiting for the rejections and looking out for the buys? This is why, again, we don't sit here and try to prove us being right or wrong, because we don't even know if someone, for all we know, took a sell, made some money here, while someone else waited for the market to give further rejections and they took a buy and made money here. Who was right and who was wrong? Nobody. But did they both follow through on their plan? Say hypothetically they did, then that is our check mark right there. That is what matters right there. First one, Amon. Is that how I said it? Let me know if not. Sorry about that. Amon is a little bit more on the Latin side. I'm Colombian, so I read it Amon. But if we're thinking more on the gringo side, Amen. You get me? So which one was it? Latin or gringo? Amon. That's that way I can become familiar with you and understand. Because remember guys, we're doing this every single day from now on. This is going to be a daily thing now. Close enough. Okay. Either or then. I apologize. If I ever just say too wrong, just let me know. Oh, okay, the Latin. So I'm on. Okay. It's a dope name, man. Oh, and also I wanted to know, where are you guys trading from? Are you guys on the eastern side? Are you guys on the other side of the world? I know we have some people here that are all the way in Japan. We're worldwide. But tell me a little bit more about you guys. As we analyze price, of course, pay attention. If I ask you guys a question and you're analyzing price, ignore me. Don't even worry about what I have to say. Focus on price action. Focus on what you're doing. Remember, that's what I'm here for. I'm here to provide that clarity and give you those extra steps to really be on the lookout for in the market. And kind of also, more importantly, I'm here to hold you accountable. But I know we have some from Japan. Where is everyone else from? Pennsylvania, okay. I visited Pennsylvania only one time. I visited Hershey, which was, what a weird little town. You have the light post, you go and you see kisses on the light post, and it's like a chocolate city. Super weird. But that was super cool. From you, okay, so we got 2 people from Pennsylvania. Nice. I'm Colombian myself, but we're over here in Miami. So I'll wait for the first 5 to 10 minutes. Okay, we have a 30-minute candle closed. I'll look at the chat now, but the 30-minute candle just closed. We're closing bullish, still above this area. This is still signaling to us at this point that buyers are still holding this support. Yes, we have those pushes below, but notice how those pushes below are not holding. It's all just wick rejections. So I look at that and it's like, if I'm really looking to take sells, I'm selling really low and I'm selling into an area that we continue to reject, right? So at this point, ask yourself that question. If you continue to see price trading below that zone, do you really want to be a part of that trade? Or would you rather maybe wait for price to really make a low, really have strong candle closes below, and then you can look for a retest of that area for a possible continuation, right? Think about this in terms of probabilities, okay? Because again, yes, we're still influenced on the bearish side. Yes, the fundamentals have not changed. So you might be asking yourself, well, if fundamentals are so bearish, why are you looking to take buys off of that support? But again, it's more so about analyzing that price action, understanding the probabilities, understanding the risk to reward available to you at the moment of entry. So in my opinion, be careful in case, yes, again, to repeat myself, yes, you could see pushes lower, but notice the fact that price continues to reject this zone, meaning that if you're looking to take sells, make sure you have candles and price closing and trading below the zone, because again, anything above here just signals that price is still holding that area of support, still rejecting, and we can either we don't even have to sit here and think that price is going to do a full reversal and we have to go up to the 70s. No, price can easily just get here and just pause and stop if it feels like it. Price can do whatever it wants, right? But again, analyze that and ask yourself those questions before looking to maybe take any trades, right? So just pay attention here. And the NYC volume is coming in. But it is getting a little bit tricky in the sense that, like In Love said earlier, what's your real name, by the way? So that way I don't have to say In Love every time, or maybe a nickname. But we are definitely getting very indecisive at this area here. Buyers are still holding the support, but then they continue to stop around these highs. It's getting a little bit indecisive, getting a little bit choppy here, because it's like you had price trying to push lower, but then it reversed. Mixed signals right there. From Japan. That's dope. That's cool. I know I've said this before, but man, I gotta get to Japan. Gotta visit those ancient temples and tap into my inner samurai. And just go Zen mode, lock in. Marcia, did I say that correctly? Nice, good to meet you. You can call me Tarzan. That's what I go by. All right, let's give this let's see. Prices once again trying to push lower. Let's see if this 5, let me look at how the 5 is gonna close. It's closing pretty strong, but still, let's see the next 15 seconds if we can actually clear below those lows here. It's looking strong. Okay, cool. Nice to meet you once again. All right, so just analyzing price action here. Once again, we've rejected these high price points here. We're now trading back into this area of support. Again, just be careful. The ideal scenario here on the seller side would be the break of the lows here and then a retest. Because if not, you could easily still see, in my opinion, some sort of bounces if you get back above those 45s here. Appreciate it. Yeah, I had a friend that went to Japan not too long ago. They enjoyed it. But obviously, you know, life started lifing. Life got in the way. There you go. Look at that push now. That's a lot stronger. That's a lot more clear right there. Just want to clear these lows now, right here. At this point, we've seen basically both sides play out, which is funny enough how we talked about both possibilities. We talked about the possibility of a at least short-term move back above these highs, and we basically got that. If you measure that, that's 120 pips right there. If anything, the push below is the one that hasn't really been too significant, but that's still about 60 pips. So whether you were looking for the buys, whether you were looking for the sells, as long as you were patient and waited for your specific confirmation, they literally both, for the moment, which is what we've seen, they both ideas have played out. One for over 100 pips, the other one has pushed about 60 pips, and now waiting to see if we can get a push lower into these 32s right here. Dollar kind of stayed a bit stagnant, in my opinion. Well, not in my opinion, just price action. You can see that right there. We've also seen oil rising over this was, let me see, on the 1 hour. Yeah, this was overnight. You can see oil getting above this minor area here of resistance and then having a push towards the upside. Again, those were those geopolitical tensions that took place overnight. Or yesterday. Yeah, yesterday. We leave this, the dollar. Ooh, as soon as I got off of that, look at that push. I jinxed it right there. But nice, there you go. That's again a lot more clear now. At this point, we've cleared those lows. We have a nice move towards the downside there. The continuation is very clear below those 32s right there. Again, if you're gonna have any pullbacks at this point, the pullbacks can come back into this area of support here, or this previous support, the 45, 44s right here. So we got to these highs right here and rejected, and look at now where we're at. So again, that's why we use those lower time frames to our advantage. So we're not completely blind to where price is reacting. So if you knew at that point, if you were holding buys off of this support right here, you know you reached an area of a reaction on those lower time frames. That's where managing risk comes into play, rather than maybe you holding and being too married to a certain bias, right? And we're talking about specifically more so like on the scalping side, right? Scalping, day trading, more on that side. Now the move is a lot more significant. Now it's also over 100 pips. So far we've seen moves take place both ways, but right now that we finally cleared those lows and we only got a minor push back above our area of interest, the bias is a lot more clear for us now. So we'll run this stream for another 20 minutes. We'll go until about 10 a.m. and we will see what more opportunities, if whether or not we're just gonna get just continuations, or if we might get a slight pullback to then do a retest and then continuing to push lower there. But so far, what do you guys think? Did you guys take any trades? Because remember, today we're a little bit more on the mixed side, talking about both possible scenarios. versus like yesterday or the other previous days, we were listing out more of like sell opportunities. Today, because of the area that we were at, we were sort of playing more defense mode rather than being a lot more like on the I was gonna say offense, more offense. That's the right word. All good. I'm assuming you're waiting for more confirmations then. Yeah, our next area of interest below here is those 4500s. We're still like 200 pips away from that, so that would be a large move. Look at that. Ken, what about yourself? Did you trade today? Or was it a day of sitting out? All right, so just to quickly do a review now that we're going into this new 15-minute candle close. 15-minute candle close, as you can see, very, very strong. We held at the support short term. Again, just to point that out, we understood the 45.45s was the area of interest, where if we continue to reject, we could see short-term moves up back into these highs here, potentially higher into the 70s. And based off what we have now, looking at price action, we got just one of those scenarios play out, which was the bounce off of the 45.45s, retest of these highs, failure to break above, and now, as you can see, we had a clear push lower. So right now, that indecision that we were talking about earlier, where price was stuck within this area and giving us signs that price can give us short-term moves or reversals off of this zone. Also based off what we've seen in the past, which we saw strong buyers coming in above the 45.45s. Again, that was only momentarily. It was only about 100 pips, which I say only, and that's humble because 100 pips is definitely a lot. So 100 pips worth of a move into these highs right here. Again, we failed to push any higher. We ended up rejecting those highs there, and then price now continue to push lower. Now it's a lot more clear. Now that indecision that we were talking about earlier, again, that's been removed, and we have a clear bias, which is what we were overall following based off of the current fundamentals and the technicals as well, which we also mentioned at the beginning of the stream, which was price, what we would want to see is the clear break below here, right? So that's what we now have finally gotten. And I'm assuming, like I said, if you guys were following through, taking trades, just let me see. Yeah, let me know what you guys were able to capitalize on. So that way, like I said, we can review that, and we can also have that in the recording in case anybody goes and rewatches these streams. They can understand how some of you guys were able to take advantage of these moves. No, me personally, for me, today was a day to sit out. I had some good days these previous days. Whenever I had good performance with the markets, I prefer to just sit out whenever I have, like, for example, today, a little bit of conflicting thoughts in the sense that, price was still reacting off of this area. I prefer to just kind of, I chose to kind of follow price action today and then just focus on making sure I review the markets with you guys. So, no, me personally, I was just more analyzing the market today. For me, Fridays and Mondays are the days where I am less active. Like, based off of my journal, I more so take more trades in the middle of the week. And especially when we have reports like this week, CPIs, PPIs, retail sales, we had clear information. Those are those days that I'm looking to take to be more active, right? Especially since I'm more so on the day trading side, not so much scalping. I'm looking for a little bit of larger moves. You don't trade Fridays either? Okay. Yeah, like follow through. If that's what your plan says, follow through on that. For me personally, like I said earlier, a little bit of conflicting thoughts at the beginning, just based off of what we were seeing. I wanted to see a clear push. Now this is a lot more clear. If there's opportunities later on, like a retest off this area and we continue to reject, that's where I could potentially, speaking for myself, I could look for some opportunities. But most likely, like I said, Fridays, Mondays, not too active. Already had a great trading week, to be completely honest with you guys. And so again, no need to have to force trades every single day. Don't look at the markets like, even though you have such strong move, like I say, playing out right now, don't get FOMO. If you had made the decision that you weren't going to trade on the Friday and you see that price is still moving without you, again, don't get FOMO because you had already made your decision, right? That's what really matters in the long term, following through on what you say. 4500s. It's close. It's close at this point, but that's where it seems like we're trying to reach based off that current volume and that momentum. But notice how those areas that we had marked off, super clean. Literally, as soon as we cleared those lows, like this one specifically, those 32s, clean melt through below that area. That's why we mark off these key zones, right? That way, as a buyer, you break below that zone, you're out of that trade, you don't fight it. As a seller, you trade below that zone, you know that you have stronger probabilities in your favor, right? Same market, different perspectives. Everybody has their own way of analyzing and executing, right? Which is also what we were talking about earlier. We were taking sells yesterday. We got that, it played out. It was like over 300 pips that played out. And then at the same time, as I'm talking about, look to secure profits, look to go break even, trail your stop losses, look to manage your risk. Someone is entering a buy position and they made money because price bounced and went and pushed back to an area of interest, right? We had that here, one of the traders here in the chat. So some of us made money selling, others made money buying. Again, what matters is, did you follow through on your plan? That was kind of like the main thing I wanted to talk about today. So again, good stuff, guys. Everyone here so far, from what I've seen in the chat, everyone's on point. I don't see no crazy people here talking about, maybe sending signals saying, oh, gold is going to do this, gold is going to do that. Nothing. Just straight analysis, objective, disciplined mindset. That's what we're about here. It's really just a matter of consistency at this point. Staying consistent, following through on your plan. Obviously, plans as you move, as you get more progress and as you improve, or maybe sometimes, you can, as much as you can improve, you can also get worse. If you analyze that, if you watch your trading journal, that's where you're going to be able to see that. That's where you get to make those tweaks that matter. Like for example, earlier Marsha was talking about she doesn't like to trade before NYSE. That should be part of her trading plan. Don't trade before NYSE because you tend to take losses before NYSE open. There you go. That's right there, part of a trading plan. Same, I think Ken said something similar as well. He likes to wait 5 to 10 minutes after the NYSE volume comes in before he decides to take any trades. Again, following through on his plan. And Ken is a great example of someone that makes money in the markets by being disciplined, following through on a plan. But all right, guys, we got about another 10 minutes and then we'll end the stream and we'll call it a week. But honestly, great job this week, guys. We did really well. Really well. We stayed extremely aware. We understood pretty much all of the market movements. Notice how when we get onto the market, we're not lost. Notice how when we look at the market, we understand exactly what is going on. We're not thinking, oh my God, what is this? What is that? No. We've already been talking about that days before. Same technical concepts, same fundamental ideas, following the overall narrative. But also, keep in mind, this is not how the markets always function. This is not how the markets always run. So we also have to take that into consideration and say it's a bit of luck in the sense that we did have such good trending markets to end the week. Because the beginning of the week, although we had a strong fundamental narrative in our favor, that range and that chop was nasty. Like getting stuck in between here, like this is what we were dealing with pretty much all week, which was just price getting stuck between these areas. What was important or what was crucial to us and what helped us is the fact that we had such strong rejections off of those 4705s, and it's like it was just rejecting time after time at the same time that you have fundamentals in your favor. So you know, as price is reaching certain high price points and you know fundamentals are still in your favor and you have now technicals aligning with that fundamental narrative, this now becomes a very clean area where it becomes now a very clean zone to sell from. Again, the only tricky part about selling from those highs was the fact that price was ranging, right? And those ranges sometimes can get a little bit choppy where you can have breaks above, like which is what we saw here, but that didn't hold for too long. So again, that fundamental narrative really helped. The fact that we got below our area of interest, like it was these lows right here, which was the low of the range, that also helped us with our bias there. And then finally, as we ended the week, as we got more geopolitical tensions increasing and then dollars started to rise, then you can see why finally we had such strong trending markets. So again, we were patient, we understood what we were looking at the entire time, and therefore we're not caught lost and trading randomly or anything like that. So now once again, before we end the stream again, let's analyze this. Let's understand what we're reacting. Price has now broken lows and is now looking to retest. In my opinion, it can do one or two things. Now that we have once again our overall structure continuing and basically this small reversal kind of gets canceled out right here, then we know, okay, as long as we can continue to stay below these areas of interest here, price can go and push lower because we have our overall trend, we have fundamentals still in our favor, we have areas of interest marked off, and we understand where sellers have stepped in. So we know, okay, clear, it's a little bit more of it's a clearer bias, excuse me. And so we know we can continue to push lower as long as nothing changes behind the scenes, right? But still using the same areas of interest where we know, okay, this is our area of interest. This is our area of interest. We know that anything above here, be careful for any sort of pullbacks. Careful for pullbacks, right? That's what you have to be on the lookout for, because if you don't get that, then what you'll start to see is price stabilizing and trading back above here, and you either range or you'll finally do those deeper pullbacks, which is what we were talking about at the beginning of the stream. But what is crucial, or what is important about this, is the price zones. Pay attention to those price zones and understand those reactions, right? That way, when market is, let's say, in between here, you're not really too worried because you are not in an area of interest. Worry about when the market gets here to that zone. So you're not always constantly looking at every single price point like an area of interest. You're more so waiting for price to reach your zones. That way you know you have stronger edges there, you have better risk to reward at these areas. That's where you should be looking to take trades. So you're not taking random trades in the middle of the range where you don't have such a clean, let's say, risk to reward. Risk to reward is really the important part when you're taking those trades, because a lot of times, even if you have strong confluences in your favor, but your risk to reward is off, then a lot of times it does not make sense to take those trades, because again, your risk to reward has to align with your overall bias. You can't just have, let's say, bearish technicals, bearish fundamentals, and think that you could just sell and hold and pray. That's not really how trading works, right? You want to make sure you have that alignment of strong technicals, strong fundamentals, good risk to reward. So you know, even if I'm wrong, I know that the potential upside is a lot more than the downside. I know that the risk that I'm taking is worth me taking because of that risk to reward. So let's pay attention to price as we reach this area here. See if we can get any sort of strong reactions here and have clean market movement, a clean break and retest. Because if we get back above the 45-44s, at that point we're back to the same idea where we were at yesterday, or earlier, which was indecision. We're back above an area where buyers have stepped in before. It becomes indecisive. It becomes a lot more tricky at that point. Appreciate it, Ken. You know, we do good work, man. We stay composed, we stay disciplined. We don't involve egos in our trade analysis or when we take trades. We keep that composure, and for the most part, as you've seen, we get paid. That's what matters in the market. Because you can talk about this and that, but do you make money? You get me? That's what matters. You know, putting that into practice. I got into buys at the 45.12s. Sheesh, Elijah. That's based on the 1 hour chart. Saw previous buyers step in and had a area, stepping hard at that area, closing at the 46.60s. You and Brian got those high risk, high reward type of entries right there. But like I said, if it's a repeatable action, go for it, brother. I'm not gonna sit here and argue with you and after you made money, you know. You got proof of concept right there. Again, just journal that, follow through, stay disciplined. But all right, guys, we're nearing the end of the stream here. If anybody has any more questions, please let me know now, so that way I don't want to just end the stream on you guys randomly. And be careful with what you ask, because I'll say, hey, we're going to end the stream now, and you ask me a good question. All of a sudden, you catch me ranting for another 20 minutes. So, but if you guys think we're good, we've done good analysis. Again, today we analyzed, think about how objective we were today. Think about the fact that rather than us looking at price as we were reaching this area, we weren't just blinded to the idea that price action was more bearish. We understood the overall bias, we understood our overall edge, but we also understood where price was sitting at. Therefore, we were still on the lookout for price to give us reactions here. And if we could see that, then we understood where price can lead to, which was, again, these highs and possibly higher. We got just one, again, just to kind of repeat myself here. It basically did a liquidity grab, it bounced, got back into those highs, and then finally we broke through. We would have been having a much different conversation if price would have broken through these lows without really stabilizing above that area of interest. You know, that's where our conversation would have been completely different. But no, we prepared ourselves for both. Again, we were disciplined enough to understand where price was at. Notice how we also analyzed the dollar and we understood where dollar was at. But now what do we have, or what did we have throughout the session? A little bit more dollar strength. That lines up exactly with the weakness that we're seeing here on gold. So we understood our overall edge, which is what we were following through the entire week. It continued to dominate the market. Therefore, sellers finally had enough volume to push below the lows. Look at the retest. It almost precisely got to this area of interest. It basically got to that area of interest, and we've now made a move back to those lows. Notice how it happened after we broke the lows, and now we've retested. So at this point, what can we expect or be on the lookout for? Okay, we've got our breakout, we've got our retest, we got candles still closing below our areas of interest, following through. Like, for example, with this 1 hour candle, what could we expect further? Okay, well, if we're not flipping on this 1 hour candle, then most likely we're gonna go and fill that wick. If we see that price is failing to stay below these lows and now starting to reverse on this 1 hour, as a trader, what can you expect at that point? Be on the lookout for price to pull back against this current idea that you have. Which is, again, I know I repeat myself a lot, but again, it's not about being right or wrong. It's literally about having that awareness and that understanding with the market there. Make sense? So with that being said, we can go ahead and end the stream there. Again, great trading week, guys. I appreciate you guys all for coming. If you guys have more questions about GatesFX, you'll find a little bit more on the description. And you guys have my Instagram, Tarzan Trades. I'll put it out here quickly. That way you guys can always, reach out. I'll be happy to help answer any questions for you guys. You guys can go ahead and follow me on Instagram. Follow me on Instagram. You have GatesFX as well that you can text. And again, I'll be happy to help you guys with any questions that you have. All right, guys? So take care, everybody. And I will see you guys on Monday at the